Jyoti, thanks very much. Good morning. Good to have you with us here. That much-awaited bounce is here. But the question is, what next? And the obvious question is, the bounce going to last?
Yeah, I guess the markets were oversold, not just in India, they were oversold across the world, and so it, didn't need much for the bounce to come. I think we'll get a bounce which lasts, this month or, the next couple of weeks. After that, what one has to see is, do we get some action coming from, let's say, the central bank in the interim? Because that is what probably can create this rally into a little more sustainable rally where central banks panic and, we see some action. Maybe we see something coming from the Bank of Japan or something coming from the Eurozone. So, that's what one has to watch for to see how sustainable this bounce can be.
With your years in the market and your feel for these things, what's your sense? Does it look like the bottom is in place? Many people that I have spoken to have said that, well, you can't go to 6,800 and then and stop there. A retest of that double, triple top, 6,350 is likely. And then, that's the point that's the inflection point, not this. Whereas you talk to some, they say, well, 6,800, and a lot of fund guys I've spoken to have said that as well, that based on fundamentals, etc., 6,900 is where the bottom is. What do you think?
Yeah, so my view is that next round of correction in the market will again be led by global factors. And I think, there's still more pain. I've been harping on this China for quite some time. I think there's still more pain which has to come out of China. It's not something which will get sorted out in a hurry. The banks there need massive recapitalization. We keep worrying about the Indian banks, but I think by comparison with China, the Indian bank problem is like very, very small. So I think that's something which will happen. I think we'll see a devaluation of the Chinese currency, which will probably have repercussions of currencies across the emerging market and probably across the world. So, those are the pain factors which are going to come. The issue is whether, we've seen some part of it happen this year in terms of the market performance. And so whether, the next round of it is going to happen very quickly, my guess is probably the next round may happen only in the second quarter of this calendar year. So I think we may have formed a short-term bottom in the market. We'll probably see this, being tested again and maybe, these sometime in the second quarter of this year. But till then, maybe we've formed a very short-term bottom. The second thing we have to watch out for, of course, is does anything happen in India which either, creates a fall much further than the global markets or, makes India more resilient. Maybe, the budget, and if any adverse taxation comes there, then that could create, a depression in the market much, much faster than the global factors.
Just talk about the taxation bit in the budget, Jyoti. What are you really hearing?
I guess, I have picked it up from the media, so it's not like I have any view, but I guess there's been a lot of talk that the long-term capital gains tax may be made from 1 year to 3 years, and maybe there'll be a lot of taxes on changes on the dividend and the way the dividend is taxed. I think more than the dividend, it would be the capital gains which will be a real worry, because one of the reasons equity has, done well is on a relative basis, at least post-tax, the returns are more, because if you hold stocks for 1 year, after that, the taxation is zero. Now, if they change that, then there'll be an immediate repercussion, I guess, in March, because people will then start getting worried about what their long-term holdings are. So that's something which one has to wait and see. Hopefully it doesn't come, but I think that is one of the bits that media has been talking about recently.
No, so the exemption threshold be increased from 1 year to 3 years for stocks, long-term capital gains.
Yeah, that's, I guess, what has been coming in the media. So 1 year to 3 years.
Do you think it's plausible? Do you think it's, does it make sense? I mean, why would the government want to do it? They've been talking about increasing financialization, moving money away from hard assets, real estate, gold, etc., into the market. So they obviously understand that this is going to be pretty negative.
Yeah, so my view is it probably won't come, and there are two reasons for it. One is, the government itself has a big disinvestment target which they are struggling to meet. So at that point of time, doing something like this means that, markets probably, get into a mess and they'll struggle even more to meet it. They'll probably not be able to meet their disinvestment target. So I don't know why they would want to spoil the market. Second is if we see what it does to India versus its competitors globally. India is one of the few countries which has like capital gains tax, and so we've had a lot of money come from Mauritius. By doing something like this, one is either driving money away from India, and what we have to remember is the last 6 months have been tough. Foreigners have been net sellers into the market, and you give them one more reason to sell. Otherwise, for people who don't sell, it will be even more incentive to go to tax havens, to go to places like Mauritius, which again the government has been trying to, curb and say that you come directly into India, don't come through, places like Mauritius. So essentially then these tax laws will make people go even more to Mauritius because, the incentive and the saving which you get by coming through Mauritius will go up even more. So I don't know, like just by that sheer logic, it probably does not make sense for the government to do it. Obviously, there's some buzz around it. Hopefully, it's misplaced and it doesn't come about. But yeah, it's something which has been, along with the global factors, something which has been weighing on the minds of the market.
Right. I mean, since you're mentioning this, and I've heard this from others as well, you'd say that this is a serious worry for big participants in the market. It is obviously serious worry, but is it a credible worry? Or you think, I mean, in the when the markets are down, more and more bad news comes in, right? The light is always shown on possibly things which possibly could go wrong. This is one of them, or this is credible, you think?
Yeah, see, my view, hopefully this is not credible. So it's just something which, as we got the global news and the market coming off, you keep coming with, okay, this can go wrong, that can go wrong. So hopefully just one of those things which does not have that much basis to it. I think, like at least what I read, the stories which I read, some of it were to do with the Prime Minister's statement that, there's a lot of incentive given to industry also. Capital gains are tax-free, dividend is tax-free. So probably he made some statement in that light, and that's where people have taken it out that maybe, then in the budget, we're going to get this tax getting addressed.
Jyoti, what do you make of the banking system now? I'm asking not your recommendations of what stock to buy and this and that, but PSU banks, right? I mean, you've got so many of them listed. As an investor, how do you think about these banks now? Do they interest you at all or not at all? And why?
Okay, so if you see the banking space in India, and this is true for the banking space, across the world, if you see, banking has been underperforming across the world. Like, it's not just India, it's, you take care of Japan, China, any of the countries, the banking space has been doing well. And, part of it just goes to the fact that the Indian economy is weak, the global economy is weak, and when the economies are weak, there's always fear that the NPL will be much more than what the banks are providing for, than what the bank managements expect and what the corporate managements expect. So I think, what we are seeing in the banking space in India is just a manifestation of the fact that, the growth is slow, both in India as well as globally, and this is, hurting NPLs. The other thing which, is playing out is how much of NPLs are actually, declared, and how much of it, is still probably going to get declared, which is not being treated as NPL today. In this light, I think what the RBI governor has been doing and, trying to get banks to become more transparent about their NPLs is probably a good thing, because, part of what we saw in the results this time was just some accounts which probably were sitting on the edge of NPLs, where, the RBI has been nudging the banks that, okay, now you please go and show these as NPLs instead of trying to, maybe not recognize these. So to that extent, probably the books are getting more transparent. I think this pain will continue in the next quarter also, so it's not going to go away in a hurry. So I think there's still time to buy the public sector banks. There's no really hurry to really go and say, I want to buy the public sector banks, because the economic growth is slow in India. It is slow across the world. And so, there's probably no real hurry to go and buy what I would call very high beta economy plays.
Right, right. Something like fair enough, something like a Bank of Baroda, which is being given a big thumbs up. A new person took charge in October 2015. They're saying we've recognized everything this quarter. So in a way, a kitchen sinking exercise. You think there also the risk is that, okay, you've recognized all of this, you provided for all of this, but it's kind of tough to imagine what will happen to these assets, how to value these assets. For how many cents on a dollar is good, and what has to be written off and things like that. Those are the bigger questions even after recognition. And what is there a resolution in sight?
Yeah, so I think there are 2-3 things with the public sector banks. One is, if they are given more autonomy in management, so even if there are past problems, but future seems to be totally different from them, then one would want to buy them. The second is, in terms of capitalization. So what we've seen over the last few weeks is that the government has been making many more statements that they are ready to recapitalize the public sector banks, which again could be a very positive sign. So if we see that translated into action, what is the size of the recap required and how is government going to fund that recap? If something credible comes out of it, then, probably we'll see like the PSU banks in general getting re-rated. And third is, there probably will be differences between a lot of the banks. So once you start going into individual banks, there'll be somewhere you think, okay, the recap requirement is much more, it's easy to recapitalize, they've recognized a lot of the NPLs. There'll be others where you just think, okay, the recap requirement is so massive that the equity shareholders are probably not going to make much money out of it. So, there'll be these 3 factors to watch out for in banks. Like some of the banks, I would think the recap required is much more than the market cap also today. So those are going to be very tough ones to do. There are some others which are much easier to do, where probably the management has changed and there's more private sector type of management, which probably will be done on more profitable lines in future.
Okay, fair enough. Are there opportunities for equity investors, Jyoti, right now, or you think it's still not a good time overall?
So, I would put it that way, that markets have become much cheaper than what they were, 6 weeks ago. So you're now buying stuff at probably long-term averages. So it's not like markets can't fall below this, because we are still at long-term averages, not at some lows in terms of valuation. But it's a time where you probably want to put in a bit of your money in equities. It's very, very tough to count and time the bottom, that this is the absolute bottom. But I think these are levels where you probably want to put in a bit of your money into the equity market and wait for pullbacks, and generally think of bad news as time to put in additional money.
In your mind, do you think we head to, you said this is only a short-term bottom, right? And most likely we retested sometime later in the year. Do you think eventually we're heading way lower?
So I think we'll retest this probably sometime in the second quarter of this year, maybe plus minus a few months, and we probably then I think it will be on the strength of what some of the central banks do, but I don't think we'll go substantially below the lows which we saw a couple of days ago. We'll probably go 5-7% below those lows, but beyond that you'll start to think that things are improving. I think 2 things will probably turn a little more positive. I think we are starting to see a bit of pickup in the Indian economy. So it's in spite of all the global factors, I think we're starting to see that bit of pickup in the Indian economy. So hopefully this gathers a bit of pace. So as we move into the end of the year, we probably have a little more comfort that earnings are going to pick up, and after many years of earnings downgrades, we are starting to see earnings become a little better, and that probably will help the equity markets after that. Because what we need to stand on is, okay, I have my earnings, this is the earnings, and once the earnings come, then you know that equity markets will do well, and we'll get a return out of equities.
Just a quick word. What do you expect the global scene to improve at all? Should we even expect that? What can really change as far as the global picture is concerned?
So I think global environment will be tough. So we have to assume that this year the global environment is going to be tough. What could improve is two things. So one is like US is probably improved. So the US economy is doing better than what it used to be. The negative spots in the world are the rest of the places. So Japan is like not doing well, and it's gone to its negative growth territory. China is the big question mark where things can really get worse. Everyone knows China is slowing, but it's not just is it slowing, is it going to create a major stress point for the world, especially the banks, the capitalization of the banks and debt defaults are the things which are worry there. And third is the Eurozone, which again is into a bit of unknown spot. So I think the surprise could come in terms of growth from probably the US.
Okay. But not on the downside, on the upside.
Yeah, on the upside. Otherwise, I think the world is going to probably be the base case is that the world is going to be a tough place, and probably China is going to create.
This. Let me be specific, Jyoti. For whatever reason, say if oil prices in the second half go back to about $50-$60, you think the mood will change substantially?
Yeah. Yeah, I think actually oil going up now is going to be very positive for equity markets and for the mood, and even for India it will be good because so India benefits from lower oil prices, but if we see a long-term correlation of Indian stock market and oil prices is very positive. So the markets do well when the oil prices go up, not when they go down. So I think if oil prices go, let's say, to $50, it will be very positive. So like a $10-$20 up move in oil from these levels is going to be very positive for equity markets.
No, fair enough. Just want to come back to specifics. Any sector specific corners in the market where you'd be watching for ideas you want to highlight?
Yeah, so one is like the urban consumption theme. So I think we'll get the pay commission, OROP. So I think urban consumption is going to be a strong spot in the economy over the next 1 year, and that's like the segment you want to play. The second is these specific sectors where the government is taking a lot of action, especially the roads, but there are some railway companies which are benefiting and some defense companies. So that's the other segment where I think the growth will continue. Third would be the rural economy. So the rural economy I've been quite negative on for the last few years, but I think probably one is after 2 years of bad monsoon this year we have to hope just by sheer law of probability that we'll get a good monsoon. Second is I think there'll be some announcements in the budget focused on irrigation and some benefit to the rural economy, because I think the government has been now trying to focus. They've realized that there's a problem there and they probably are losing votes also because of it. So I think the third would be the rural economy, where stocks have really got battered over the last 12 months. So that's been a sector which has underperformed. It did not take part in the rally at all. So that would be another sector I would watch out for.
Jyoti, it's a pleasure. Thank you very much for your time.